Hello, this is Manesh Patel from the EII Capital Group. Today is February 19, 2012. This is our weekly Ichimoku analysis where we cover all the global markets from the US side to Europe to Asia. As you could probably tell, this was a great week for all the markets, and we'll talk about them in just a moment. So our normal disclaimer to state this is for education use only. All charts you can see are from Thinkorswim from TD Ameritrade, TradeStation, or TC2000 from Warner Brothers. Here are my contact details here at mpatel@eiicapital.com. You could access any of our free resources here at ichimokutrade.com, from Facebook to Twitter to our heat map here, which could tell you 2 time frame, 3 time frame, or 4 time frame, or 5 time frame opportunities. And we kind of went through that last week, and we'll go through that every occasional on the screens and so forth every week. But that's it. So let's go through and start going through all the global markets first. And if you look here, let's go to Frankfurt first. Remember, this is the weekly chart. You look at Frankfurt, it basically popped out of the cloud. We're still moving upwards, upwards, upwards. We look like we're trying to get here to about 71.84. But look at this huge movement. This has been 3, 4, 5, 6, 7, 8, 9. 9 weeks of straight upward movement. So be very, very careful right now. And we'll talk about more about this in the U.S. stock market, but I'll be very careful entering position long right now in any of the global stock markets because they definitely need a pullback. This thing definitely needs a pullback. If you could sit there and pull back to these levels here, this will be perfect right here. 63.20 is where we kind of need a pullback if it could get to that level. If not, if it could sit there and at least get to about 6,500, we'll be happy. But this definitely needs a pullback level, just like all the other global markets. Paris, if you look over here, still hasn't broken out of the cloud, so I definitely wouldn't look at this one going bullish. If I had a choice, I'd definitely stick with the German market in Europe. So a good Paris trade, as we've been talking about this, is going along the German market and short the Paris market and playing a percentage game, and that's been working out really well for the last 2 years. So we're going to continue to move forward with that. London market here. It is out of the cloud, a little more stronger than the German market, but look at the resistance it's coming up to, which is basically a 6,000 level. It's getting there slowly, 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 but moving up there. South Africa, really doing nothing at all. Notice it ended a week negative compared to all the markets which were positive. That's not good at all, so definitely be careful of that one. Israel, really not doing anything at all. If you look at it, it ended up the week at 1%. Remember, the DAX and them ended the week close to 1.5%. London was barely a little, 33.33, and the Paris was 1.35. Okay, so just be careful. The Israel was ended up positive, but still doesn't look good as far as the charts are concerned. It still hasn't broken out at all, which is where you need it to be. Stockholm is another one. This has broken out. This moved up at 1%, and it's above the cloud here, but definitely needs to pull back too. Pullback level on this one. Let's go to the daily and just look at it. If you could pull back to about 1,040, that'll be great. But you definitely need to pull back there too. Let's go back to these. We cover that. Let's go to Turkey. Turkey is a huge movement upward. Definitely, it's at a major resistance right now. It definitely needs to pull back to about 47. Russia, big movement up to, needs a pullback level before we could even sit there and try to start a trend and try to become bullish sentiment completely. But definitely needs a pullback there too. Notice the theme is all of them need a pullback. The ones that are strong. Shanghai, you're at a major resistance level right now. It's do or die right now for Shanghai. It's going to be interesting to see what happens next week, but definitely do or die right now as far as the Shanghai market's concerned. And if you look at everything here, basically the support level is going to be 22.53 on this one, and the resistance level is going to be basically right around 23.74. So we're right around the resistance level right now. Hong Kong market's breaking upwards here, like all the other markets. Definitely needs a pullback. Japan market, remember, Japanese yen got very weak. Japan market went straight up. It's at close to a major resistance level at 9,500. It needs a pullback, and then we can see exactly what's going to happen there. Indian market basically is taking this journey. It looks like it's trying to get to 1,900, about at least 18,500 right now. Definitely needs a pullback too right now before we could tell exactly what's going to happen there. Okay. Sydney market really not doing anything at all. barely up last week, which is not good. But Sydney, but that's the overall trend right there. And Korea market, which we haven't gone through, it's broken out of the cloud, but definitely needs a pullback right now. It's at a major resistance level too, so definitely needs a pullback there. Let's go over to the Americas. If you come over to Americas, let's go look at, where the heck is it? Let's come here. Here we go. Canada market. Canada market didn't even close up at all last week. It closed down negative. That's not good at all. Little weakness on the Canada side, but don't fret. It's at a major resistance level. If it could break that, it has a potential change in sentiments to be bullish above the cloud. So definitely keep an eye on that one, but it probably won't happen for a little while. Brazil is basically broken through 6,000, going its journey now up. It's at a major resistance level now. We need it to pull back to about 6,000, 60,000. If it can, that'll be ideal, and then watch for it to kind of go up. But this is posed to actually be really, really strong moving forward, so definitely keep an eye on that one. And then Colombia here is broken out of the cloud here. Definitely needs to pull back too, and it's at a major resistance level. So let's go check out the U.S. markets. Let's go look at the Dow futures. Remember, on the left-hand side, basically your um, daily time frame. On the right hand side is basically your weekly. You can notice here we basically closed above this last pivot high, which is dated back here and there. And let's shrink this down some more. Let's get some more data. And let's go back some more. And you could see that we're going back to the high basically registered here, right around here, in 2008, right before the huge move went down. So this is going to be our next resistance level when you're looking at these charts, which is going to be 13,111. We're basically at 12,885. We definitely need a pullback right now. I don't know if it's going to get to 13,111 and then bounce off that, but we definitely in desperate need of a pullback right now. In fact, we've exited the majority of our long positions now, which we've been long since December, and pretty much now we're looking at opportunities to go short. Not completely going completely short, but we're looking for great opportunities to go short right now. But we've exited out our bullish positions, which pretty much because we've been going up for 9 weeks solid, and we definitely need to pull back in order to be healthy. Let's go look at the E-mini S&P 500 futures. Definitely going up, up, up. It's at a major resistance levels too, as you could see right here from the charts. Going back here, if you go back to 2008, it's definitely not as close to the resistance level of what the Dow was in 2008. So this is weaker of all the two. That level here is 1442 is pretty much the level we have to get to on the E-minis to go back to 2008 high before it basically tanked. But we are at a major resistance level right now, so this definitely needs to pull back too. NASDAQ, this is the most interesting one here. Let's enlarge this because this is the strongest of all of them right now. Even the Dow technology is leading, and you could see it's at an all-time high right now. And has been at an all-time high as we keep on moving up, 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 up. If it could sit there and pull back to this level here at 24.35, that's going to be a really great level. I don't know if it's going to pull back that far or not, but all the markets definitely need a pullback level. But if it could pull back to that level, I would definitely start looking at opportunities to buy technology stocks like Cisco and so forth moving forward. And if you look at TF, which is basically Russell Future Small Caps, remember we talked about the seasonal patterns January and February as it goes up. Now it's kind of stopping, coming to a halt now. You definitely need to pull back here. This is kind of where you now start getting out of your small cap trades at the end of February and start looking at more long-term pictures and stuff like that. But as you can see, the moral of the story globally right now is that you got to sit there and wait and be patient and wait for a pullback now. If you're bullish, I definitely would be taking profits right now and lightening your portfolio, if not completely going into cash and waiting for major pullbacks to happen. Okay, in ichimokutrade.com, this is our trade of the week. This is a stock that basically we've entered. And if you look here, this is the daily time frame here. We basically entered here on a pullback level here, and you could see the entry was right here, and we'll go to the description in just a minute, but the entry was here, our stop was here, and our target was there. This is a uranium stock that's basically right around $1 stock. Um, so we entered the small caps. Remember, we entered the small caps in January and February because there's seasonal patterns are where they trend the most compared to anything else out there. So basically, Euro is a small cap stock. It is a uranium company. To keep the risk low, we did a pullback trade. Okay, the entry was basically the green line, which is a value of 96. So 96 cents a share was basically where we entered. The stop was basically 91 cents. So this was just basically a 5 cents risk play for us. The target was basically the next resistance, which was the pivot high. So our target was $1.17. This would basically give us a 21 cents reward. If you look at the risk reward at that point is basically we're going to be risking 5 cents to make 21 cents. So we had a 4-to-1 reward risk ratio, which is a 400% gain of our risk. Okay, so these are the type of trades you should be entering, which is basically high reward risk trades out there, where you keep your risk low and basically risking $1 to at least make 4 or more based on your risk. Okay, and that's the way you should be trading, and that's how institutional trade people are trading. If you're not, then you definitely need to sit there and change the way you trade and make sure that you trade this way, otherwise you're going to dig a hole to a point you can never come out. Okay. If you have any questions, you could definitely email us here. Here's my contact details. You could access our heat map and our email modules, which gives you 2, 3, or 4 time frame buy and sell opportunities, which are high probability trades right there from the website. If you have any questions, definitely email us.